All right, guys, you saw the title of the video today on this wonderful Saturday morning, or actually now it's Saturday afternoon. Today's gone by pretty fast now that I think about it, but you guys saw the title of the video. Technical analysis does not matter. You heard that right. It doesn't matter. It doesn't matter. All these indicators, the price action, volatility, watching all the day-to-day, it does not matter if you are a long-term investor. And we're going to break it down in this video a bit further, talking about trading, investing, when to look at charts, when not to look at charts. And no, I'm not dogging technical analysis in this video, guys. Obviously, I look at charts all the time. You guys watch my videos, but I do want to give a bit of a different perspective in this video. So if you guys find value, hit the like button, subscribe, drop me a comment, let me know your thoughts, join my Patreon, and make sure to get your 5 stocks from Moomoo with a $100 deposit. All that's linked down below. Now, let's get into the video. So there's obviously a big difference between trading and investing. You guys at this point should know that. Maybe you don't. If you don't, I'll tell you right now, investing, when somebody's like, oh, I'm a stock market investor, I'm buying stocks for the long term, they're for the most part buying stocks, buying ETFs, and they're going to continue buying the dip, dollar cost averaging, and they're going to hold for 5, 10, 15, 20 years, whatever, up until retirement. That is what investing is. Or maybe you hold for 3 years, 5 years. It really depends on the person. But overall, anything above, let's say 5 years, 10 years, in my opinion, even 3 years, I guess. I mean, that's not too long term, but let's say anything above 5 years is long-term investing, while trading is the short-term stuff. A lot of the stuff that we talk about on the channel. You know, if we do a 1 month out options move, that's trading. You know, if we do a day trade, obviously that's considered trading. If we put a 6 month bet on a stock or an ETF, that's trading. Even a year, or a couple of weeks. You know, a swing trade that lasts a couple of weeks, that is trading. And obviously, when you're trading, you're looking more at the short-term price action, the intraday moves, what's going on in the past couple of weeks. You're looking at volatility. You're keeping a close eye on the news, what's going on, you know, with different stocks, the economy. That's what you're focusing more on. And in other words, while investors, long-term investors, might look at that as noise, right? You know, a lot of people think what happens in the short term, you know, oh, the rate hikes, oh, you know, the geopolitical issues. A lot of people look at this as short-term noise that knocks people off the track. You know, a lot of long-term investors think that. And the most important thing for a long-term investor is staying the course, right? So that's a big difference between how traders think and what long-term investors believe, right? Long-term investors think, let me just remove the noise. Let me not even think about what's going on in the short term because it's all noise. And we just got to stay the course. That's what long-term investors think for the most part, right? And traders think, okay, let me listen to this noise. Let me look at this price action rather, and let's try and profit on it. That's kind of the trading perspective. So at this point in time, guys, there's a lot of stocks that are getting decimated. And from a technical analysis perspective, you're going to be looking at these stocks. Facebook's one of them. You can see it here on my screen. And you're going to be like, there's no way Facebook is a buy. You know, if you're looking at the chart, if you're looking at the indicators, and if you're looking at it more from a short-term perspective. You know, it looks like a falling knife. We have a death cross. We're under the moving averages. We're not really showing any signs of a bottom, hence why it's called a falling knife, right? It's really not bottoming out yet. Same thing with PayPal. And where people get confused and where there's a lot of confliction, is that even a word, or a lot of conflict? I don't even know. But where people get mixed up is where they're trying to use technical analysis too much when they're looking to make longer-term decisions. So, for example, you know, if I want to buy PayPal for the long term, if I want to buy Facebook for the long term, I'm not going to be looking too heavy into the technicals. I'm going to be focusing more on the financials, the valuation. Do the numbers make sense? That's what I'm going to be focusing more on, as opposed to, let's say, oh, it's downtrending. Oh, it's a falling knife. Oh, it's under the moving averages. We're seeing a death cross. Does that make sense? And I feel like a lot of people take the wrong route when they're trying to buy long-term positions. They see stocks getting destroyed, like PayPal, like Facebook, like Alibaba, and by no means am I telling you guys what stocks to buy, but they see these stocks, they're downtrending, they're falling knives, and they're like, okay, I'm going to wait till the chart shows a reversal before buying in. But in my opinion, and from my experience and the way I've done things, which I could be wrong, I don't know, but I haven't really focused much on the technicals when making long-term decisions. And the truth is, you may be asking yourself, Stas, what if you buy the stock? Let's pull up another one. I don't know. Let's go back to Facebook. What if I buy Facebook and it just keeps on going lower? The truth is, when you are looking at it from a long-term perspective, and it is a falling knife, which in this case, Facebook is a falling knife, the way you have to approach it is buying very slowly. Don't get too excited. A lot of people, they see a stock dump 30% in a day, and they get too dang excited. They end up unloading all their capital, and then they start losing money, or at least in the short term, if the stock continues seeing the massive drop that it's seeing. And then people are like, oh, I should have looked at the chart. Oh, I should have done this. Oh, I should have went a bit lighter on my initial purchase. So the moral of the story is, guys, without going too off of the rail here, or without talking too much or blabbering, what you guys have to look at is, or understand is, technical analysis is good for short-term things, for making short-term decisions and seeing what the markets and how investors and traders are feeling in the moment, right? Because we obviously can see recently the markets have been volatile. That is valuable for us. It's valuable for us to look at the charts to understand that, the markets have been crazy. SPY's gone from 480 to about 420 up to about 460. So in the short term, that's important. But if you have a long-term perspective, you don't really give a crap if the market's at 480 right now and it dumps to 420 next week. It goes back up. You don't really care, because you're going to be buying regardless. So when it comes to falling knives, guys, and if you're looking at a long-term perspective again, or from a long-term perspective, the way to do it, in my opinion, is buy a little bit, scale in, small, in falling knives, because they might go down even lower, and always keep some cash, because you will be able to buy on the dip. And the truth is, again, I'm not a big fan of technical analysis for making long-term decisions. I don't know how many times I'm going to say that in this video, but for me, with Facebook, I just bought some at 248. I nibbled a little bit an initial position. I bought more at 238. And the technicals, they're not looking good for Facebook. It's stupid. It's a stupid decision for me to buy it now based on the technicals, but with the numbers, the way I've ran the numbers, the way the financials look, when I lift the hood on Facebook stock and I look into the company, the numbers make sense to me. So for Facebook, that's what I'm doing. It's a long-term play, and it might not make sense from the short-term perspective, buying here and buying more as it continues to drop. But from the long-term perspective, I think it's going to make a lot of sense. Same with PayPal, and this one's controversial, but I think Alibaba as well. I could be wrong. On Alibaba, but I've been buying this one. I haven't really bought much lately, but this is one that I have bought on the dip, and a lot of people are like, Stas, why are you still buying Alibaba? Why are you holding Alibaba? It doesn't make sense. It's still downtrending. And guys, stocks go through downtrends. They go through rough time periods. And ultimately, if you're right, if you pick a good company for the long term, you buying in the downtrend, it's going to work out for you. And then when it reverses, when the stock reverses, everybody's going to be like, oh, you were a genius. How'd you know? Why did you, how'd you know it was going to go up? Why did you hold on? Or you're so right, or great for holding on, or whatever. So you got to just know when to apply certain tools. To wrap this video up, guys, you got to know when to apply what in the stock market, When are you going to apply technical analysis? You got to know when you're going to apply options to your strategy. You got to know when you're going to apply, certain hedging strategies to your portfolio. You got to know all these things and use the tools wisely and use them at the right time. So that's it for this video. I hope you all enjoyed it. If you did, hit the like button, drop me a comment, let me know your thoughts, and make sure to join my Patreon if you want all my buys, sells, call-outs, all that good stuff, Discord access, that's linked down below. And you guys could also get 5 stocks from Moo. Use my link down below, deposit $100, and you guys get up to 5 stocks, each of which could be valued up to $3,500. Use that Moo link down below, deposit $100. I'll catch you guys in the next video. Peace out.